It's that time of year when our new FY1 colleagues are starting their first jobs throughout the country. And if you have just started, then welcome, and we really hope that you are settling in nicely into your new roles. One of the benefits of starting as an FY1 is that you now start to get paid. And in today's podcast, also YouTube video, if you're watching, we're going to deconstruct the mysterious and complicated NHS Payslip, which continues to cause confusion even for established doctors. In doing so, we hope to shine a light on what the different elements mean for our new and old colleagues, and we'll even throw in some information on tax codes and how to claim the tax back on your professional expenses. If you're watching this on YouTube, you can see an example payslip, and later on, we'll show my first ever payslip for my first FY1 job and my second ever payslip for my FY2 job. So keep watching if you want to see a little piece of history. Now, for those of you who've just started and are new to Medics Money, my name is Dr. Ed Cantelo. I'm a salaried GP down on the South Coast. I'm also a chartered accountant and a chartered tax advisor. I worked for PwC in London for 9 years before I saw the light and went to medical school. I then later on founded Medics Money with my co-founder, Tommy Perkins, who's another GP, to help provide education for doctors and empower them regarding their finances. Since then, we have had some excellent team members join us, and I'm delighted to be joined today by one of those, Dr. Cyra. And Cyra, do you want to introduce yourself? And also, it's a little bit more recent than for myself. Do you want to tell us about your memories of starting as an FY?
Ooh, absolutely. Hi, everyone. My name is Cyra. I'm a doctor and a chartered accountant, like Ed. I was a chartered accountant for 6 years before becoming a doctor, and I trained with the National Audit Office. I do remember my F1. It wasn't very long ago. It was only 4 years ago. And it was a baptism by fire. I started in general surgery in a DGH, and it was a sink or swim situation. Thankfully, I swam. But yeah, I don't think I'd change it though. I learned a lot of things very quickly. I learned a lot about myself. Um, and one of the things that I found really important was actually navigating the payslip, because we will come into this, but this is probably the first time most people are going to start seeing their student loans being repaid. And so that was a little bit complicated, and we had a few issues with that. But yeah, I do remember my first job, and that was Gen Surge.
Yeah, oh, no, fair enough. Yeah, so my FY1 job was a little bit longer ago than yourself, sir. Sarah. I mean, I started basically, I think exactly almost 10 years ago now, which is pretty unbelievable, on a gastroenterology job on a ward in the Royal Surrey at Guildford, which I think was called Millbridge Ward. I was thinking the other day, I can't actually remember. I think it's Millbridge Ward. It's definitely opposite Merrow Ward, which was cardiology, but pretty sure Millbridge. There were two of us FY1 starting there. The other FY1 was called Rebecca. Just she was so lovely and absolutely brilliant. Whatever she's doing now, I bet she's a phenomenal doctor. And I just remember everyone being really supportive, really understanding that we were new. I was really nervous and took ages to find where things were, and I was frustratingly hit and miss with cannulas throughout. But I just remember it being a really fond. I think of it really fondly. It was a really good time, to be honest. Yeah, it was excellent. Interestingly enough, part way into my FY2 job, we had what was called the 2016 junior doctor contract come into effect in England, resulting in the pay structure and pay slip that we all now know and well not really love, but anyway, it definitely things did change and get a lot more complicated, and of course that's what today is mainly about. So, Sarah, you've very kindly agreed to share your pay slip or one of your pay slips,
Yeah.
and go through it with us. Do you want to take it away?
So this is one of my payslips from FY2. The reason I've included it is because it was the only one of my rotations that I had weekends and nights. So you can actually see all the components of what you will be expecting on a payslip. So first I'll go through the main bit of information, that's the information related to you and the information related to your hospital and your post, and why they're so important to make sure that they're correct. Then I'll go through the income side, our favorite side, and then I'll go through the deduction side, which is boo, the worst side. And I'll just explain all of them in a bit of detail so you understand exactly what those components mean. And giving you that information hopefully means that it'll help you spot errors in the future and be able to action them sooner. Um, So first of all, personal info. Make sure that I'm going to just scroll back up here. Yep. Make sure that your assignment number is correct and it's the same as your ESR. That your name is correct, because it needs to also be the same name as what HMRC knows about you. I've put the location. I've redacted that, but the location should be correct as well. And your job title is really important, especially the pay scale description. And the reason I say this is because this actually happened to me in F1, where they had put the incorrect foundation doctor sort of descriptor, the pay scale description, and it meant that I was being paid on the agenda for change one, because I was put as a band 2 rather than an FY2. So that actually changes your salary and your wage and things. So it's really important that you get the descriptor correct. Everybody's paid at a standard 40 hours on the contract. And then we'll go into more detail as to what happens to these extra hours, because in F1, it was 48 hours for me per week across the whole year, not 40. And then you just make sure that your salary and your wages are correct. And you can check them and have the most up-to-date ones on the DDRB pay circulars. And all you have to do is Google doctors' pay circulars, and then currently the 2025 ones. And it gives you a whole table of what the different not bands, but all the different levels and what our basic pay is supposed to be. So it actually does give you that information. It's a little bit harder checking that your tax office name and your tax office reference are correct. Where do you get that info from? So I wouldn't really worry about that much. That should be your payroll doing that correctly. Ed will go through tax codes, and that they're not as straightforward as nobody thinks they're straightforward. So I don't know why I'm saying that. They're confusing, but we will smash that. And then make sure that your national insurance number is correct as well and matches what HMRC has about you, because that's the only way they'll know who this payslip belongs to. And so, yeah, that was here. So personal info, make sure that your name, NI number, job title are correct. Pay scales, make sure that they're up to date with the DDRB pay circulars, which you can just Google. Your standard hours will be 40, and then all the additional stuff will come as extra bits underneath in the payment bit. And then your tax codes, we'll talk to you about what the tax codes would look like if everything was normal and there wasn't anything to change your tax code. But your tax code might be different from your colleague's tax code, and there would be some reason for that. It's just making sure that that is reflected correctly in your tax code. So don't panic if you have a different tax code. We'll tell you why it might be different, but if there are problems and you think there's a mistake, we'll also tell you how to deal with that as well. So pay and allowances, this is the section number 2 that I showed you. So the pay and allowances bit in my payslip is pretty much the entirety of what you might expect to get if you're in a job that does hours over the 40 hours. So mine was 48 hours a week, if you do nights and if you do weekends. As you can see in F2, I was doing 1 in 2 to 1 in 3 weekends, and it was really depressing and really hard. But anyway, I got paid for it a bit. So first of all, basic pay, that's for your 40 hours full time. This is the only component of the pay that you get which is actually pensionable. The rest of it isn't. Locum pay is also not pensionable, unless you're less than full time and it's going to make you up to the 40 hours. So the 40 hours are what's pensionable for the NHS pension. And so you'll see that your annual salary that was in the salary and wages bit will basically be paid at an hourly rate, and you can divide that and do the maths, and it basically gets you to what your 40 hours should be. And then any additional hours that are not night or weekend are paid separately. So the NP, it says additional roster hours NP, that's non-pensionable. It's paid at the same rate as the basic pay, but it's just for over the standard 40 hours and isn't pensionable. And then any nights that you do, the hours that you do are paid at a 37% uplift. So then you get 37% more for those particular hours. In my pay slip, they were paid across the 4 months. So I probably did a set of 4 nights every 3 or 4 weeks, but it didn't really affect, like it was the same on my pay slip all throughout. So it was split across the 4 months of my placement rather than as and when I did it. Because there were some months just how it worked out with the calendar, where I didn't do any nights, but I was still paid the night duty because it's just split across all 4 months evenly. And then lastly, it's the weekend premium. So you basically get a percentage uplift as well, based on the number of weekends that you do. Now, the thing to remember with this, which really wound me up, was that it's based on the higher number of weekends. So to try and make sense of that, I had a 4 month placement. For 3 of the weekends, they were 1 in 3, but for one of the weekends, they were 1 in 4. So I got paid at the 1 in 4 one rather than the 1 in 3 one, because the way it's set out, it says less frequently than 1 in 3, but more or equal to 1 in 4. So I got the 7.5%, even though the majority of my weekends were 1 in 3. I didn't get the 10%, which I was very upset about. But
Yeah, that's right.
they do get you that way, where one of your weekends will be the higher frequency, so they don't have to pay you the higher uplift. And so if there's a bit of confusion about that, that's why that's happening. So you will notice that you will get that uplift. So in this payslip, for example, I got the 10% uplift, because that's what they based it on. So this is all your pay and allowances, and then we'll go into deductions. Boo, as I said. But deductions are are mostly tax. So the couple of the PAYE stands for pay as you earn, and it is based on this table here, which is your income tax bands. So everybody gets a personal allowance of £12,570 if they're earning under £125,000. Is that right?
Just to clarify, so with your personal allowance, it's above £100,000. So if you get above, for every £2 you go above £100,000, you lose £1 of your personal allowance,
Right.
all the way up to £125,140, where you've by that point you completely lost all of your personal allowance. Pretty unlikely to affect any FY1s currently, but one day you might get to that heady point.
Yeah,
So who
if
knows?
if we get our pay restoration, yeah, we might do. Um,
Absolutely.
in 10 years' time, I don't know. So that personal allowance is basically a nil rate band. It means that you're taxed at 0% for that £12,570, and then you start to get taxed on money that you earn over the £12,571 in bands between 12,571 to £50,270, you're taxed at 20%. And then from the £52,071 to £125,140, you're taxed at 40%. And then anything over £125,140, you're taxed at 45%. So it's this stepwise tax system rather than everything being taxed at one rate.
Yeah, we should
Yep.
probably mention actually, so just that those rates, just for general information, those rates apply to Northern Ireland, to Wales, to England. In Scotland, there are more rates and higher rates, different thresholds. So I think there are 6 income tax rates in Scotland. So the rates you see on the screen that Sarah's just read out, they don't apply to Scotland, which has its own separate regime.
Yeah, good point. And also, Scotland isn't on the 2016 contract either. It's on the 2002 contract. So, in Scotland, if you're a doctor in Scotland, you would have been told about bandings rather than these uplifts and all these things that I was talking about on the previous slide. Bandings are basically someone has assessed the job, decided that the number of nights and the number of weekends and the number of unsocial hours sort of suggests that you should attract this much extra of your basic pay, and then that's applied to the banding. So you can have banding at 1, which is the basic pay, 1.5 or 2 times or 2.5, and basically it's just an uplift, a flat rate uplift based on how unsocial they think the job is. You can also, as a cohort, if you feel like the banding isn't fair, you can actually petition them to review the banding, and then so you have a little bit more power in that sense, I think, than us in the 2016 contract. But at least the 2016 contract sort of accurately reflects what you're doing rather than this sort of subjective banding assessment. So that's the PAYE. And yes, the tax thresholds are different and the tax rates are different for Scotland as well. So you can just Google that, income tax thresholds for Scotland, and that'll come straight up. Next one is your national insurance contributions. On my thing, you can see it says NIA. That means I've got type A national insurance or class A. And that basically means that for the first, from between £542 to £1,048 a month, I don't pay any national insurance contributions. Between £1,048 and one pence to £4,189 a month, I pay 8% national insurance contributions. And then anything over the £4,189 a month, I pay 2% national insurance contributions. So based on my payslip that you saw earlier, I was not hitting that threshold for the 2%. So I was paying that 8% of the value between £1,048 and one pence, up to whatever I was earning. So, is the national insurance different for Scotland as well, Ed?
No, national
No,
insurance is the same throughout the whole of the UK.
brilliant. So that's the same for that. And then the next one will be the NHS pension, and Ed's going to talk to you a little bit about the NHS pension in a moment. But basically, that deduction is being paid into your NHS pension, and it's not going to reflect how much you're going to be paid at the end. It's a way of subscribing to the NHS pension to make sure that you're still a member of it. And it goes up in bands. So this will be based on your pensionable pay for the whole year. And so if we go back to my payslip earlier, so my pensionable pay at the time was £34,012. So if we go down and we go to the table, that would fit in the band that is £33,869 to £50,845. And so I'd be doing a 9.8% contribution. So that's what has been deducted on my payslip, 9.8% of my pensionable pay. And my pensionable pay is only the 40 hours at basic rate. Anything I do over that is not pensionable. And then lastly, student loan. Student loan is complicated, effectively based on the plan that you're on, and there's plans 1 to 5. There are different thresholds applicable before you start paying it back. And when you start paying it back, you'd be paying 9% of the whole of your gross salary. It's not just a pension or a component like the pension. All of it, all of the pay is subject to the 9% that you pay back. And one sneaky bit here, which I will mention now actually, is that if you did an undergraduate degree and then you did graduate entry medicine, for example, and you were on two different plans, so my partner was on plan 1 and then plan 2, when he started his FY1, he ended up starting to pay back the plan 1 from his undergrad straight away, because you don't start paying back your student loan until a year after you've graduated. But because he'd already graduated a few years ago and he's already now hitting the threshold, he immediately started to pay plan 1 back. And then in the second year, he had to start paying plan 2 back as well. And they don't sort of just let you pay one and then pay the next one. He has to pay both of them together at the same time. So some people might end up actually paying back more in their student loan if they're on different plans, and that can make your payslip look a little bit different from other people's. And in the student loan bit, it's not split. So it doesn't tell you that, oh, this is your plan 1 component, this is your plan 2 component. It's just a lump sum. So it's really hard to tell why your figure might be different from someone else's. However, I've put all of that and lots more information in a guide. The QR code is here, but we'll pop the link as well in the podcast bit if you're listening, so that you can have a look at the guide, or you can just Google Medic's Money Student Loans Guide, and that'll come up as well. And it just gives you a full breakdown of how the student loan works, how it's calculated, how you pay it back, what the thresholds are, and what some of the pitfalls are, especially if you're on more than one plan. Ed, over to you. I'm obsessed with Andy.
Doing a podcast with Andy.
Yeah.
You got me instead. So just for those of you who don't know him, Andy is another member of the Medic's Money team, who is a specialist medical accountant and knows everything that needs to be known about the NHS pension. He's just a pensions guru, and normally he's the one that comes on and talks all about pensions. And on that note, I'm going to mention the pension a little bit here, but we have a huge wealth of resources on Medic's Money all about the NHS pension, from specialist medical accountants, such as our colleague Andy. So rather than go into it in big detail, as it's really complicated, also, I'm sure we could do at least 18 podcasts for hours on end, all about it if we wanted to.
We
So
do.
I'm not going to say too much about it right now because I think you'll all glaze over. There's a lot more resources that are better taught than I can say here. So please do go and check those out. But a couple of things to say. Okay, so firstly, the NHS pension is what is known as a defined benefit pension. Okay, and that means that it pays out a guaranteed retirement income based on your salary. So at the moment, it's based on a career average of your salaries, your average salary over your career. It's inflation proof. It's guaranteed by the government. You pay, as Sarah just pointed out, you pay a percentage of your salary every month to the government. When you retire, they pay out a guaranteed monthly pension. And that contrasts to what's known as a defined contribution pension scheme. That's where an employee and their employer, they contribute into a pension pot that gets invested, usually in stocks and shares, which means that value of the pot can go up and down based on the underlying investments. And then when it comes to a retirement, the individual will purchase what's called an annuity with the value of that pot that they've got. And then that annuity will pay a monthly pension that way. So you can see why the NHS pension is pretty valuable. It's not dependent on the stock market. It's inflation proof. It's backed by the UK Treasury, who you're going to assume won't go bankrupt. The economy is such that who knows these days, but you'd assume it won't go bankrupt. And there are also quite a lot of other benefits as well, which we won't go into, but things like death in service benefits, benefits for dependents, which are also really valuable. And a couple of things to say about it. We get asked quite a lot by doctors asking us, say, should I opt out of the NHS pension? We know for a fact that a lot of healthcare professionals are opting out of the NHS pension. I don't quite know how much that's the case right now. It definitely is the case right now, but it was certainly worse many years ago with the cost of living crisis when it's at its full height, its full peak. So we know that a lot of healthcare professionals are opting out, and we definitely get asked a lot, should I opt out? Now, we can't give you advice on that. It's very much dependent on your personal circumstances. We can't really give what's called investment advice. We're not legally allowed to do that. But what we will say is, just think really, really, really carefully before you do opt out, because there are lots of benefits to being in the NHS pension. It's very valuable. Go away and check out all our resources and really, really think about it. As I say, we can't say don't do it. We can't say do it. Just think really, really carefully, because it's just so valuable. Okay. Two other things to mention, just while we're on the subject of pensions. We often get asked by doctors if they can sort of determine, if they can have a say in where their pension is invested, because they want to invest in ethical investments and so on. But as we kind of pointed out, and hopefully you guys have got the gist now, the NHS pension doesn't really work that way. As Sarah pointed out, think of it as paying a kind of a membership fee to be entitled to the pension later on from the Treasury. And finally, just point out that the NHS pension is tax deductible. It's automatically taken into account on your payslip. So you'll see on your payslip something called taxable pay. That is your gross pay less your NHS pension, and it's the taxable pay that then your payroll will apply the income tax rates to when they're working out your income tax. So tax deductible. And on that subject of tax relief, it's really important to make sure that you claim tax relief on your expenses, or your allowable expenses, because that can save you, hundreds of pounds a year. I think in the sort of my first 5 years of training, I think I saved, over £2,000, £2,900, I think it was. Really, really important to make those claims. We sometimes hear of people that say to us, or say on social media, it's not worth claiming. Why bother? Or trivial amounts, all this sort of stuff. It's really not trivial. It really does rack up. So please make sure you're claiming your allowable employment expenses. You can claim for your professional subscription, so you can claim for that GMC fee that you're paying. You can claim for your medical indemnity insurance that you're paying. You can claim for your BMA fee if you're a member. And later on, you'll likely pay a subscription to a Royal College, and you can claim for those payments as well. as well as any of those really, really expensive exams that you'll end up paying for if you do join a Royal College, if it's part of your training contract. So definitely make sure you claim. You can claim for the current tax year that we're in. I should mention, for those of you who are new to us, if you don't know already, tax year very strangely runs from the 6th of April every year to the following 5th of April the following year. So we're currently in the 2025 to 2026 tax year, because that started on the 6th of April 2025 and will end on the 5th of April 2026. So you can claim for the current tax year. You can claim for the previous 4 tax years, assuming that you're a UK taxpayer, you pay the expenses yourself, and you don't do a tax return. If you do a tax return, you need to make sure you claim your expenses every year on that tax return. Okay. If you just started it as an FY1, and definitely if you haven't done this already, we would recommend as a first step setting up a personal tax account with HMRC. I put the link. You can see the link there on YouTube video. We'll put that in the notes as well for the podcast. But yeah, step 1: set up a personal tax account. That's not only going to let you make your tax relief claim when you come down to it, but it's also going to let you see what information HMRC have on you, your national insurance record, what constitutes your tax code, an estimate of your income tax bill, and so on. So it's a huge amount of really useful information on there. And also it does change, and they get it wrong, and definitely check it out. I mean, not that long ago, and for no discernible reason, nothing changed, nothing happened. They decided that I no longer worked for my GP practice. So they didn't have that as a record anymore on my personal tax account. They didn't think I had a job. And despite getting monthly pay slips from my employer down here on the South Coast. So for no reason, it just disappeared. Obviously, they were weird. I immediately, because I check it regularly, I got them to reinstate that. But yeah, it's really important. I've got a really, really good friend called John, one of my best friends. At one point, his personal tax account showed that his income was estimated income was like 150,000 pounds. And again, just bizarre information. So HMRC, they can get these things wrong. Keep checking it, okay? Once you've set up your personal tax account, when you're ready to make that claim, we'd recommend, we're biased, you download our free step-by-step guide to making your claim by going to the website there on the YouTube video. We'll put it in the notes, but www.medicsmoney.co.uk/free guide/, and this will take you through step-by-step what to do to make that claim. You will need to definitely gather your receipts beforehand. So either keep them as you go along, or the guide will tell you where to find them, but save them as in PDF format, because when you make your claim, you have to upload those receipts now. Didn't used to have to, but you do now. We would recommend kind of waiting till the end of the tax year. So wait until after the 5th of April to make the claim for the tax year just gone, because otherwise you may end up incurring some more expenses and then have to do the claim again, or an extra claim. So for efficiency purposes, you may just want to wait. But whatever you do, don't forget, keep your receipts and make that claim. So that's that on tax relief for the minute. Sorry, do you want to talk about some of the kind of common issues that people face?
Yeah. Can I just jump in about tax relief as
Yeah,
well?
please do. Absolutely.
On your GMC account, it's really easy to get a copy and an invoice of what you've paid. So in terms of proving that, it's quite straightforward. And then the same, goes for you'll get invoices with the Royal College and things like that. So just save them in a folder. And the other thing is, if you've claimed, say, partway through the year, and then you have to go back and do more, there's literally nowhere on the HMRC online bit that actually tells you what you've already claimed. So it's really confusing if you've not remember you can't remember what you claimed for and what you didn't. And so keeping a spreadsheet, I know I'm biased spreadsheets, but actually just having a tax relief spreadsheet that you tick off what you've claimed for, because you're the only one who's got that record. There's no way of actually seeing it online to say this is what I have claimed and what I left to claim.
Yeah. It's a really good point. It's so silly that they don't. You can see you can see a lump sum that you've claimed, the total amount. There are ways to find that out potentially, but literally, no way to work out the breakdown. So great point. Definitely keep an idea of what you've claimed for.
Brilliant. And tax relief, we were talking about this in a different podcast, Ed, but you mentioned that you can actually claim tax relief on your second stethoscope onwards.
You can, yeah.
which is one of the other things. I think it's all in the guide actually, all the other little extra things you can do. But it's worth doing. It absolutely adds up. So there's lots of common issues that you can face with your payslips, and so I've just got a few here, but there might be more. One of the things that can affect your tax code is if you have a previous job and you are starting this one, because you can be emergency taxed temporarily while HMRC thinks you've still got both jobs going. And there might be a delay in them being updated, or your employer's just not updated them at all, which has happened to me on several occasions. The beauty of the online system that Ed was talking about in terms of your personal tax account on the government website is that that's a really good way of notifying HMRC. They've got an option there to sort of notify us of your employment ceasing and things like that. So just because the company hasn't or the previous job or employer hasn't updated HMRC doesn't mean you're powerless in the situation. You can actually update them yourself. And if they've also got your calculations wrong, which happened to me and it happens to anyone who locums, because HMRC will see your locum income as just, oh, are they just now earning more per month? We should probably increase their estimated income. And if you've just had a heavy month of locuming, that can skew your whole annual calculation. So you can also update them of what an estimate of what you'll be making as well, and then they can base your sort of their decision on how they're going to tax you based on that information. But if you notice that your tax code's a bit squiffy, and Ed will explain what an emergency tax code looks like, that's how you can start to deal with that issue. Incorrect wage and pay scale description. I mentioned this before. This is on the personal information bit at the top of your payslip. If they've got the pay scale wrong, they're going to use the wrong salary, and then that's going to mess up all your pay. And then trying to fix an error is a lot harder once it's happened sort of more than once. So if you've got a couple of pay slips before realizing that, to try and correct that and get the right pay sort of sorted out is quite complicated. So I would highly recommend looking at your first pay slip that you get and working out whether everything is correct or not, because it'll be easier to fix these than it would waiting longer and then having to try and do that. Working less than full time is complicated payroll wise. Because of the way less than full time pay is calculated, it's not just prorated. It's not prorated the same way. So just because your basic salary is going to be prorated by 80% or 60% or whatever, it's based on what you actually do. So you might be doing the same number of nights as someone who works full time. You might be doing the same number of weekends as someone who works full time. And so each of those components are different and add a more opportunity to get things a bit wrong. So if you're working less than full time, carefully look at your payslip, because these things can complicate matters. And then having student loans on different plans. I mentioned this before. So, a few of us, now that we're older, will be on plan 1 and plan 2, but you might actually now be in a situation where you might be plan 2 and plan 5. And either way, having 2 different student loans is going to complicate things, because you're going to start paying your undergraduate loan back as soon as you start hitting the threshold to pay it back, rather than waiting the whole year for the current degree student loan repayments to start. If you're on the same plan for both of your student loans, then you will only pay back for as it wouldn't be at the same time. It will be one after another, because it's all just one big lump sum at that stage. But you will start paying it back sooner, because you graduated previously, and you start paying it back a year after you graduated. So you might notice that if you've got colleagues who are undergrads, they don't have a previous degree, they might not actually be making a student loan payment in their first year, whereas you might, because you've already got a previous degree and that's the one you started paying back. So that might explain a little bit of the difference. And then here we are, a piece of history, an antique. There we are, here it is.
Right, it's a thing of beauty, and yeah, so an antique from now 10 years ago, so August 2015. Look at that. Yeah, guys, what we're referring to, for those of you on the podcast who, of course, are not watching on YouTube, is my first ever payslip. And I thought it'd be useful to use that to illustrate a couple of points. I'm going to show you this payslip, and then I'm going to show you my second payslip as an FY2, as I say, to illustrate a couple of points. So the main reason for talking about these payslips is to talk about tax codes, which we have mentioned a few times now. I'm going to go into what those are in a little bit more detail, and the phrase emergency tax code that Cyra's just mentioned to you guys. One thing to say, if you're watching YouTube, you may see that it does look a bit different to the one that Cyra showed you to her payslips. As she mentioned, in those days we had the system that Scotland still has, known as banding, where the basic pay was then increased by, was increased based on your band that your job was assigned. So band A would get a higher pay premium applied than band B, and so on. There are also numbers in there as well. So you mentioned band 1 and band 2, and so on. You can see that I was band 1B on this payslip. Later on, I was as an FY2. My first job, I was in A&E, so that was a 1A, I believe. I think we'll come on to it. Yeah, it should say 1A. There you go. And so, as I say, the payslip will look a bit different to Cyra's, but that's because this was 10 years ago, so a whole different kettle of fish in those days. Now, we mentioned tax codes a few times. Your tax code is a code, funnily enough, hence the name, that is sent by HMRC to your payroll department to enable them to work out how much tax to deduct from your pay. Now, it's most commonly at the moment, ignore what number you see on this payslip here if you're watching on YouTube. Most commonly, the tax code is 1257L. Now, why is that? Basically, everyone in the UK, whether you're in Scotland, England, wherever you are, everyone gets a tax-free allowance, as Cyra mentioned, of £12,570. So the most common tax code, you take your personal allowance, you divide by 10 pretty much, or just chop off the last digit is what they actually do, and then add a letter to the end of it. So most people will see 1257L on their payslips, and I'm pretty sure most FY1s who just started, when they get their first payslip, are going to see exactly that 1257L, probably QMU at the end. That phrase QMU I'll come on to in a second because it's very relevant to our new FY1 colleagues. That tax code, as I say, that's used by your payroll department to work out how much tax to deduct from your gross salary, or gross salary, your taxable pay. So not your gross salary, your taxable pay. So it's a really important thing. As I say, on your personal tax account, you'll be able to see what makes up your tax code. Initially, as I say, if you're an FY1 just starting, that 1257L, it's fairly easy to say why you've got that tax code. It's just your personal allowance that they use. If you make a claim for your your employment expenses, you make a claim for tax relief, then that is almost certainly going to get adjusted so that HMRC will give you extra tax relief every month based on your professional subscriptions that you've claimed for. Okay. You may see a number lower than 1257L. That may be due to your personal tax circumstances. It may be that HMRC are trying to reclaim some tax, or there may be other reasons why it's a bit of a lower number. But as I say, 1257L is what most people should see. On this payslip, you're seeing 1060L, 1060L. That's because this was 2015, so the personal allowance was much less than it is now. Okay, so that's why you're seeing that amount there. Aside from using this to just show you a piece of history, I wanted to mention this QMU tax code. Okay, so a lot of people get really worked up about QMU versus non-QM, which is the other thing you can see. Basically, if you were to see a non-QM tax code, which you'll see, my second pay slip, you can see it there. That basically applies 1/12 of your personal allowance every month. Whereas QMU, say it stands for cumulative, that means that every month HMRC take a cumulative position. Could you scroll up, please, Sarah? Thank you. They take a cumulative position and assess your tax position every month, looking at what has happened previously in the tax year. So eagle-eyed viewers on YouTube may note that on the right of this payslip, there is nothing for pay as you earn, PAYE, on this payslip. And that's because this was my first job in the tax year. So applying a QMU or cumulative tax code, they're looking at my tax position in the tax year to date. This is August. So they're looking from April to August. And they're realizing that, well, I didn't have any income until this point. So what they're doing is they're giving me a bigger chunk of my personal allowance in August in this payslip, and therefore I didn't actually owe any tax in that month. So for you new FY1s, note that you may not actually pay any income tax in the first few months of receiving a salary. So definitely enjoy that. That's lovely. But make sure that you account for that, because you're going to potentially get a lower net income in later months as you start paying tax. Okay, so next we have my second payslip as an FY2, which I received in September 2016 from St. Richard's Hospital in Chichester. You can see my tax code there is BR, the letters B and R, non-cum. Now, BR is an emergency tax code, which has taken away entirely my personal allowance and then applied a blanket 20% income tax rate. So you can see on the payslip for YouTube, if you can't on the podcast, it says my taxable pay was £3,324.85. And then I've got a pay as you earn amount in the deduction side of £664.80. That's basically 20% of my taxable pay. You can't see, there's no personal allowance. I'm just not getting one. They've applied a BR tax code. So what happened to ensure that I was on an emergency tax code in that September 2016? Well, I hadn't received a P45 from the Royal Surrey, and HMRC thought that I worked for both the Royal Surrey and St Richard's, and they received a payslip from both those hospitals or both those trusts. So confused, they applied an emergency tax code to ensure that they weren't missing out on getting the tax that they thought they were owed. And it's really common for FY2s. So if you switch trust next year, I know we're talking about FY1s at the moment, you've only just started, you're thinking, almost certainly not thinking about your F2 job yet. But it's very common for FY2s as they switch trusts to be put on these emergency tax codes. If you have switched trust, so if you're an F2 right now, or any other doctor that switched trust, just keep an eye on your tax code. If you see a BR tax code or a D0 tax code, which will tax everything at 40% on your main pay slip, it's likely to be wrong. Not always, but if it's on your main pay slip, it is very likely to be wrong, and you could end up paying more tax if you're not vigilant. So if you think you're in the wrong tax code, you can go to our tax code blog on our website to find out more about it, and also how to change it, because you can use your personal tax account to ask HMRC to change it back. No point in going to your payroll department and saying this is all wrong. They don't have the power to change your tax code. It's only HMRC that is allowed to do that. All right, so do you want to maybe wrap up? I think we've got some other resources people can go to as well.
Yeah. So just a quick point about this as well. Yes, it's really important to get it corrected as soon as you can, and it would be good that you weren't overtaxed. But if you are overtaxed or undertaxed, at the end of the tax year, everything that you've earned is assessed and checked to make sure that you've been taxed properly.
It should happen. Just be very much often it doesn't always happen that way. So there's a lot of things that should happen, but that don't always actually happen. I've known some consultants, for example, that have been on D0 emergency tax codes for ever and a day. So you're absolutely right. In the ideal world, especially now things are automated, things should work themselves out. And for all we know, that's going to happen. But yeah, just watch out, because it doesn't always.
Okay. Yeah. So basically, just scrap what I just said and sort it out. is the point.
It's always good to be empowered and to know what's going on, work out what's wrong, work out how it should change. Yes, if you're lucky, HMRC may change it for you, but don't forget as well, even if they did, that was September 2016. If they did sort anything out, that wouldn't have been until, I don't know, June, July 2017, say, and I could have been really out of pocket. So it's another reason to be vigilant, I think.
Absolutely. A few things to check out. I'll just go through. If you want resources that can check your payslips for you or help you check your payslips and make sure you're being taxed correctly and on all of those things, these aren't endorsed by Medic's Money. First of all, these are just ones that I'm aware of in the ether. A couple of them are free, one of them isn't. So Mind the Bleep, so mindthebleep.com has a doctor's pay calculator. And so you can enter, it's very generic. You just enter the information about your work schedule, and it can sort of spit out what your expected pay and deductions might be. Phenomics is an app where you upload your work schedule and your contract. It uses AI to analyze that, and then you upload your payslips, and it checks your payslips against those documents and tells you whether you've been over or underpaid based on that. That's free as well. And then there's Doctor's Paycheck, and it does a similar thing. It's on the website and you upload your pay slips and it checks it for you. But I do believe there's a subscription fee for that. Again, not endorsed by Medics Money. This is just what I'm aware of that's in the ether that might sort of give you a bit more information, because we can't answer personal questions about your pay slips and your tax codes. So if you needed a little bit more help, there might be somewhere you can go. The other thing I'd recommend checking out that we provide is WMSDTU. It's what medical school doesn't teach us, a bit of a mouthful. But we've got an Instagram page, WMSDTU, which has a lot of this information on it. We have a free ebook online, which you can download. You can subscribe to our podcast and our newsletter as well. And it's basically chock full of information like this to help early career doctors and medical students with their finances. Medics Money, that's us, that's Ed, and that's Tommy, and that's Andy. And we do also have a newsletter, we have a podcast, but we also tend to go into other things like investing and pensions a little bit more deeply, especially for senior doctors and consultants as well. And we have lots and lots of guides and blogs. So it is worth, just because you might not think it applies to you just yet, doesn't mean it's not worth looking at, because it will apply to you one day. So don't bury your head in the sand. There's lots on there. And then the financial wellbeing course is an 8-week course that Medics Money runs. It's a very small cohort course, and it covers everything from budgeting, investing, and pensions. It's a thorough course that helps sort of build your understanding from the ground up of how to deal with your finances and how to feel a bit more savvy and empowered when it comes to dealing with your finances. And that's all of us, again, contributing to that course as well. Have I missed anything, Ed? Would you like to add
No,
anything?
I think that's absolutely perfect, Sarah. And
Yeah,
on that note, I'd just like to say, thank you so much for coming on and sharing your payslip for us.
absolutely.
That's great.
I'm hoping this next one looks good, because I need it.
Yeah,
Yeah,
that's that. Absolutely, yeah. Well, fingers
yeah,
crossed, and at least, yeah. Hopefully, I'm sure it will do. Fingers crossed for you as
yeah.
well.
Thank you.
And to everyone who's listening or watching, thank you so much. If you're watching on YouTube, please consider liking and or subscribing. I think it's mandatory for me to say that. But if you want to get notified about more doctor finance related content, please do subscribe or subscribe to our email. And of course, for you FY1s, good luck with your new roles. And hopefully you'll join us on the next podcast or YouTube video. And of course, until then, take care.
Thanks for having me.
Thanks.